Understanding the stock market. The stock market can feel overwhelming, especially for beginners, but it's essentially a marketplace where companies raise funds and investors buy shares to grow their wealth. When you purchase a stock, you are buying a small portion of a company, meaning your wealth rises and falls with the company's success. The stock market is often compared to a living organism because it constantly changes based on economic trends, company performance, global events, and investor behavior. Understanding the fundamentals helps you navigate these changes without fear. In 2025, online trading platforms and mobile apps have made investing more accessible than ever. Today, you don't need a lot of money, special qualifications, or a finance degree to start. All you need is patience, curiosity, and a willingness to learn. There are different types of stocks to know about. Growth stocks are from companies expanding quickly, which may offer huge returns but come with higher risk. Dividend stocks, on the other hand, provide steady income by paying a portion of their profits back to shareholders regularly. Knowing the difference helps you choose investments aligned with your financial goals. Stock indexes like the S&P 500, NASDAQ, or Dow Jones track groups of companies and reflect overall market trends. For beginners, indexes are useful because they provide a snapshot of how the market is performing without analyzing each individual stock. In 2025, technology is changing how beginners interact with the stock market. AI-driven tools and apps provide insights, stock predictions, and trend analysis that were previously only accessible to experts. These tools can help you identify opportunities, track your portfolio, and even learn from your mistakes, making the learning process much smoother. Remember, the stock market isn't a place to get rich overnight. The key is long-term growth, understanding market cycles, and gradually building wealth. How to start investing. Getting started in the stock market is simpler than most beginners think. You don't need huge sums. Many platforms allow investments with as little as $5 or $10. The first step is to open a brokerage account, which is like your bank account but for stocks. Choose brokers that are beginner-friendly, low-cost, and provide helpful educational resources. Some apps even offer practice accounts, where you can invest virtual money to learn the ropes without risking real money. Once your account is ready, set clear financial goals. Ask yourself questions like, are you investing for retirement, for a big purchase, or for regular passive income? Your goals will shape your strategy, risk tolerance, and the types of investments you choose. For instance, if your goal is long-term growth, you might focus on growth stocks or ETFs. If your goal is monthly income, dividend-paying stocks might be better. Research is crucial. Avoid investing based on trends, social media tips, or hearsay. Learn how to read financial statements, understand a company's earnings, and track market news. Start with companies and industries you already understand. This makes research easier and reduces mistakes. Diversification is another key principle. Don't put all your money into one stock or sector. Instead, spread it across multiple industries to reduce risk. In 2025, ETFs, exchange-traded funds, are a popular option for beginners. ETFs allow you to invest in a group of stocks in one go, giving instant diversification and making it easier to participate in market growth safely. Consistency is more important than timing. Many beginners make the mistake of waiting for the perfect moment to invest. The reality is, regular small investments over time grow into significant wealth due to the power of compound interest. Many modern investment apps offer auto-investing, which automatically invests a set amount each month, helping you stay consistent and avoid emotional decisions that could harm your portfolio. Avoiding common mistakes. Making mistakes is part of learning, but some errors can be costly if you're not careful. The most common beginner mistake is investing without research. Buying a stock just because it's trending on social media or because a friend recommended it can lead to losses. Always review a company's fundamentals, its growth potential, and industry trends before investing. Another major mistake is letting emotions drive decisions. Fear and greed are two of the strongest forces in the stock market. Beginners often panic during market dips and sell stocks at a loss, or they buy into hype during market surges, paying more than a stock is worth. Patience is key. Staying calm and sticking to your strategy often separates successful investors from those who lose money. Overconfidence is another trap. Just because one investment did well doesn't mean every decision will succeed. Avoid putting all your money into a single stock, thinking it will always grow. Diversification, realistic expectations, and continuous learning help you navigate this. Another mistake is focusing on short-term gains. Even professional investors prioritize steady, long-term growth over get-rich-quick schemes. Technology in 2025 can help mitigate these mistakes. Investment apps provide risk scores, alerts, and AI-driven guidance to help beginners make better decisions. But technology is just a tool. Understanding the basics, being patient, and following a plan is what truly leads to consistent success. Learning from mistakes without being discouraged is part of the investing journey. Building a smart investment strategy. A strong investment strategy combines knowledge, patience, and discipline. Start by deciding how much you can invest safely without affecting your daily finances. Then, determine your risk tolerance. How comfortable are you with fluctuations in your portfolio? High-risk investments like growth stocks can bring larger returns but are volatile. Low-risk investments like dividend stocks or bonds are slower but more stable. Diversification is essential. Spread your investments across sectors, industries, and types of assets. This reduces risk and ensures that a drop in one stock doesn't dramatically affect your overall portfolio. Regularly track your investments and review your portfolio's performance. In 2025, most brokers provide dashboards and AI-powered insights to help visualize your investments, risks, and potential growth. Beginners can use these tools to make informed adjustments without getting overwhelmed. Continuous learning is another key component. The stock market evolves every year. Staying updated on trends, new technologies, and economic changes helps you make better decisions. Follow expert analysis, participate in online communities, and read beginner-friendly investment books. Learning doesn't stop after you invest. It's a lifelong process that increases your confidence and results over time. Finally, remember that investing is a journey, not a sprint. Start small, invest consistently, avoid common mistakes, and keep learning. With discipline and patience, even beginners can build a portfolio that grows steadily and provides financial security. In 2025, the stock market offers more tools and opportunities than ever before, making it possible for anyone with determination and knowledge to succeed. Tips for growing your investments. Over time, once you've started investing, the next step is learning how to grow your portfolio steadily and safely. One of the most important principles is consistency. Regularly adding money to your investments, even small amounts, takes advantage of compound growth, where your returns start earning returns themselves. Over years, this effect can significantly increase your wealth, often more than occasional large investments. Another tip is reinvesting dividends. If you own dividend-paying stocks or ETFs, reinvesting those dividends instead of cashing them out allows your portfolio to grow faster. This is a simple yet powerful strategy that many beginners overlook. Additionally, consider periodic portfolio review. The market changes constantly, and certain stocks or sectors may perform better over time. By reviewing your investments every few months or once a year, you can rebalance your portfolio, sell underperforming assets, and focus on areas with growth potential. Learning to stay patient is also crucial. The stock market is volatile, and beginners often panic during downturns. Historical trends show that markets usually recover after drops. Avoid making impulsive decisions based on short-term fluctuations and stick to your long-term plan. Diversifying across different asset classes, such as stocks, ETFs, and even bonds or mutual funds, can help reduce risk while improving returns. Finally, continuously educate yourself. Read articles, watch tutorials, and follow trusted investment communities. Staying informed not only helps you make better choices, but also boosts your confidence as a beginner. The stock market might seem complex at first, but with the right approach, anyone can start investing and grow their wealth over time. By understanding how the market works, setting clear goals, avoiding common mistakes, and building a smart investment strategy, beginners can confidently take their first steps. Remember to stay patient, invest consistently, diversify your portfolio, and keep learning. In 2025, with technology and resources more accessible than ever, the opportunities to grow your money are greater than before. Start small, stay disciplined, and over time, you can turn your investments into a powerful tool for financial growth and security. Investing is not about luck. It's about knowledge, strategy, and persistence. Every expert investor started as a beginner, learning step by step. Focus on long-term growth rather than short-term gains, and don't let fear or hype control your decisions. With dedication and smart choices, the stock market can become a reliable path toward achieving your financial goals. If you found this explanation helpful, make sure to subscribe for more deep dives into the stock market and investing.